So first, I want to thank y'all for being here, and taking time to invest in your financial education. My name is Charles Buck. I know most of y'all know me. Some of y'all may not. Um, from Natchez. So I grew up like most of y'all did, and I wasn't raised around like stock investors. Nobody sat me down to explain the stock market to me. I didn't learn it in school. I learned by just being curious. You know, you hear about it on TV all of the time, so that kind of drove me to it. I started asking questions. I didn't know where to get the answers. So I went to Google, I went to YouTube. I started investing maybe, I started looking into it maybe like 14 years ago, but I didn't get serious until maybe 10 years ago, where I actually started using my own money. And I made a lot of mistakes. I did a lot of studying, but I made a lot of mistakes because I didn't know that you could paper trade and use virtual money to practice before you actually get in the game. So here I am practicing with real money. You know what I'm saying? So uh that didn't turn out well. But I look back on it now. I just, you sometimes you have to do it the wrong way to learn the right way. And over the years, after studying so much, studying so many people, because everybody have a different strategy, it actually became like a passion of mine. Um, and eventually that passion led to me creating global stock alerts. And that's where I spend most of my time sharing my knowledge and actually learning with the people that I have in that community. And the main thing that I try to do in there is help people become more confident, you know what I'm saying, with understanding the market. So the reason that I'm doing this presentation tonight is so that, I have hopes of just helping, even if I help one person learn something tonight that changed the way they think about money, investing, building wealth, then it'll be worth it. You know what I'm saying? So whether you're completely new to the stock market or you've been trying to learn on your own, like like I did, uh, I designed this to really simplify the process and to help you build an understanding step by step. So tonight is like about just the foundation. Like what we're talking about right now is trading. Uh, Most people are investors and they buy and they hold, stocks for the long term. This, even what we're going to go over tonight, will help you with that as well. But there's another side of the stock market that a lot of people don't know about, and that's actually trading. And a lot of people trade um, to make it a passive income, right? Versus, holding it for the long term and setting up for your retirement. Some people, you can do both. You don't even have to choose one or the other. Like I do both. And I know a lot of people that do both. I know some people try to put one against the other, and you don't have to do that. Like you can have a long-term portfolio and you can have another portfolio where, you take those risks and you trade. So what we're gonna go over tonight is the foundation for what you would need to really do both, because you really need to know what you're looking at on a stock chart to do either one. You know what I'm saying? So um, tonight we're not talking about gambling or chasing hype, which is something you see a lot because there's so many gurus on Facebook. Um, and it's definitely not about getting rich overnight, bro. That is not how this works. I promise you. This if anybody guarantee you that, they're lying to you. You do not get rich overnight in the stock market, right? You will win, you will lose, but The objective is to win more than you lose and to manage your losses. So you have to have risk management. So tonight we just building on straight understanding, like the basics, like what you would need no matter what your goal is in the stock market. You're gonna need what we're gonna talk about. And so a lot of beginners fail because they jump straight into it, trying to make money before they ever learn the foundation. And I'll raise my hand. That was me. So starting out, I jumped into it before I knew the foundation. I lost a lot of money, to start out. Um, and I followed a lot of random alerts, chase candlesticks emotionally. And I really risked too much money like too early. So I did all of that before I even truly knew what I was looking at, right? But my philosophy was like I knew that if I had some skin in the game, it would make me pay attention to it. You know what I'm saying? It would make me keep up with it every day. And that's with me having a 9 to 5. So what we're gonna really cover tonight is just the stock market basics in regards to chart reading, candlesticks, like what they are, how they function, support and resistance, which is very, very important. Being able to spot that, of course, momentum, and we'll touch a little bit on risk management. Um, but the goal is not to be perfect, so it's not perfection. The goal is progress. Like you want to start somewhere, you know what I'm saying? Like, and I'm gonna help you figure out where to start with reading charts. And once you understand more about the market, the more confident and disciplined you become over time. Like this, man, you're not going to get it all listening to me tonight, but you're going to get enough to get the wheels, turning. So once again, thank y'all for coming. And before we even jump into the charts, man, like I want to know in the chat if y'all could just put how many of y'all have ever purchased the stock ever? Like, so I know where we at. So, okay, y'all jumped out there already. Right, right. Okay, okay. That works. Okay, so um now how many of y'all have looked at an actual stock chart, the actual chart, and didn't have a clue what you was looking at? Because that was me. Listen, know what I was looking at, brother. I'm being straight honest with y'all, man. Heck, I didn't know what it was. But I knew that I needed to know what it was. You know what I'm saying? So really that's where I started. You know what I'm saying? That's exactly where I started. Like I remember opening a chart for the first time and I'm looking at green candlesticks, red candlesticks, lines everywhere. All of the YouTube videos that I'm watching, they talking about indicators. So I'm looking at indicators, even though I don't know what they do. But it looked, they made the chart look pretty. So added them because I thought that's what was necessary. I'm looking at numbers. I'm thinking like, man, there is no way I will ever understand this. And maybe some of y'all felt that way too. You know what I'm saying? But over time, like as I studied it and the more I've traded, I realized that it's really not as complicated as it looked or as some people make it sound. You know what I'm saying? Like it's not as like I can sit here and use a bunch of terms and stuff that I know most of y'all not familiar with to make myself seem like this genius, but really, man, it can be explained to you in a way that you understand. And I had to listen to those fake gurus and stuff to know that, experience taught me that. So what I'm gonna try to do is just simplify it, to make it where people who have never traded before can understand it. So I want y'all to understand what a stock chart actually is, why traders use it, how to read candlesticks, what buyers and sellers are actually doing. Let's see what support and resistance is, and uh, most importantly, just how to start looking at the charts with confidence instead of fear, because emotion is very prevalent in trading, right? Whether you excited, confident, scared, it'll run your anxiety up, you know. And a lot of people don't talk about the psychological and emotional aspect, you know, to trading. So once you get to a point to where you can control those things, man, you would that right there alone would make you more accomplished than most beginners. So let's see. All right, got here. So the next one. So what is a stock chart, right? So if and I also want to encourage y'all to um take a screenshot of these slides as well. So what I did is I put a lot of information on them because I'm going to talk about them, but a lot of what I'm going to talk about, I just put it on the actual slide so that you can screenshot it, save it, and put it to the side. Um, and so that's why you're not going to see just a bunch of bullet points and me talking. I actually put a lot of the information on there so you can refer back to it. But so what exactly is a stock chart, right? Um, it's really a visual representation of a stock's price movement over a period of time. So instead of looking at a bunch of numbers like in a dashboard or something like that, the chart allows traders and investors to actually see how the price is moving. You can actually look at it. So think of a stock chart like a map, right? Because it's going to help show you where price has been, where price is currently, and how price has reacted in different situations. Uh, the There's a constant battle between buyers and sellers. That's what you're watching right here on a stock chart. You're just watching a fight between buyers and sellers, and that's basically what creates the movement that you see on a stock chart every day. And every movement you see comes from one thing, as I just said, buyers and sellers. So if you can imagine, like, let's say an auction, right? And someone wants to sell you something, right? Another person wants to buy it. And if a lot of people want it, then the price usually goes higher, right? And if nobody want it, then of course the price usually goes lower. So the stock market kind of like works the same way. And when buyers become more aggressive than sellers, the price rises, right? And the opposite for if the sellers are more aggressive. And that's basically all you're seeing on a chart. So every candlestick that you see records who won that battle during that actual period of time, because you have different time frames that you can look at on a chart, from a 1 minute time frame to a 1 hour to a 1 month to 3 months, right? And each candlestick represents that actual time frame. So if we're on a 5 minute chart, the candlestick that you're looking at represents the price action for 5 minutes, right? So if it's 9:30, at 9:35, that candlestick forms, and then another one starts from 9:35 to 9:40, right? Um, but the one thing that you should understand early is that these these stock charts really tell a story. So they're going to tell you a story of momentum, fear, confidence, where the hesitation was, the support, resistance, and just overall market sentiment for the most part, right? So if, for example, right, I'm gonna give you an example. If a stock suddenly drops, right, after it received some bad news, then that chart would reflect fear, right? Fear and selling pressure, you know. Um, if a company reports strong earnings, revenue or strong earnings per share, then that could attract more buyers. Buyers could rush in, and then if you look at it from even an emotional standpoint, man, that's confidence, right? That's if buyers step in, they're confident that the value of that stock or the value of that company is going to increase over time. And that leads to the momentum, right? That pushes that stock higher. So, um, when you're looking at this chart, and you're looking at the different time frames, right? Just to go back to that for a second, uh, traders and investors use those time frames to see where a stock is going. But I know I have a lot of people that ask me about day trading. So of course, if you're day trading, then you're gonna look at the shorter time frame. So you might look at a 5 minute time frame because you're just trying to take advantage of price action in shorter periods of time. You day trading, so you in and out, within a day. That's like everybody wants to be a day trader, but it's nothing really special about it. Like other than that just means that you buy a stock and you sell it the same day. Nothing more, nothing less, right? So the strategy for day trading varies from person to person because some people scalp and uh, uh, some people they use different strategies. I don't want to go too deep into the strategies, but just know if what day trading is just buying and selling a stock in the same day. That's it, right? So short-term traders, such as day traders, may focus on different minute charts and things of that nature. If you're swing trading, right? And basically a swing trader is someone who holds the stock for longer than a day, and they're taking advantage of a swing in price, right? So they're buying it with the goal to um, take profits on it once it swing to a certain level. They're not planning to hold it forever, like a long-term investor. So that's why it's swing trade. You're just taking advantage of a swing in price. If Apple was $50 in January and today in June it's $30, right? But you think that it has bottomed out and it's starting to go back up towards that 50, it might be $35 today. So you buy it at 35 and you just waiting on it to swing back to 50 for you to take profits. So therefore you're swing trading. And that could take anywhere from longer than a day to months, for that to actually happen. But most swing traders focus on the daily chart, right? Um, long-term investors may focus more on the weekly and monthly charts, um, because they're holding it for a long time anyway. So if you're looking to hold a stock long, for a long time, then of course you're gonna want to see a bigger picture, right? In regards to historical data. So you might look for, the trend over the last year, to try to help you predict where it might be a year from now, right? So I just want to say that different time frames give you like different perspectives on the market, right? Um, Another thing that's important to understand charts is that know that it helps traders identify patterns and trends, right? So when traders study charts, they're looking for breakouts, right? when they break above a level that it's been fighting to break out of for however long, um, you're looking for reversals. So y'all have heard the phrase "what goes up must come down," and vice versa. So if a stock is going up, you're looking for an indication of when it's going to reverse and come back down. So that if you bought it low and it's going up, you're going to want to get an idea when it's reversing coming back down, because you might want to sell it at that high point and then wait for it to come down and be cheaper again to buy back in before it reverses and go back up, right? So that's why support levels and resistance levels are important. And we're going to talk about that more later. But traders also study charts to see trend continuations, just to, and we're going to look at it, but you want to know if a stock is trading upward, sideways, or down. Like that's the three directions that a stock. And from that, when we trade, we can find where we enter a trade and when we exit one, right? So no guessing. Remember, no guessing. Like everything we're discussing right now is technical analysis, right? So that's what it's about. And while charts are useful, I want to make this clear. Even though they're useful, um, they aren't magic, and no chart can predict the future perfectly, right? They just help make you make a more informed decision. So, when you're looking for a setup, at least you can try to look for the highest probability setup, and get an idea of what a momentum is, and how price behaves to certain things, right? So the more time you spend actually studying charts, the easier it becomes to recognize the patterns and understand how the market actually moves, right? And that understanding is one of the biggest steps toward becoming a more confident trader, So price tells a story, man. The chart tells you a story, and sometimes you might see a story of confidence, a story of fear, excitement, and uncertainty. In some cases, um, you know, just to put it in perspective, when a company reports great earnings, people get excited about that, especially if you're holding that stock. So the chart is going to reflect that. Like if people get excited, you're going to see more people buy it, you're gonna see that stock go up. And when bad news come out, people panic, you know. The chart is gonna, reflect that as well, because people will start panic selling. And once they start selling it, even though the bad news came out, because the sellers are winning, price of that stock is going down. And they look, that bad news may have came out, and it could be a good company that it came out on. You know what I'm saying? But just because it was the bad news, they started panic selling, and the chart you're gonna see that on the chart. So um the chart is it's a it showed you human behavior, man. And I love studying them. I'm a people watcher too, man. I like studying people. And if you think about it, man, human emotions haven't changed in a long time. So everywhere you look, you're gonna see fear, greed, hope, in some cases patience, and those emotions will show up on a chart every day. You just have to know how to identify it. But yeah, take a screenshot of this slide. Go to the next. All right, so um let's have a look at like what the chart is actually showing us, right? So when Most beginners open a chart for the first time. Of course, it's overwhelming. There's a lot going on. So I'm gonna actually go to a real chart right now so that y'all can see it. Y'all can screenshot that as well before I take it down. Mm, let's see, go to this other chart. Right. Let y'all see what I'm. Okay. So another thing, I study all of my charts on TradingView. That's what this is, TradingView. I know there are other options out here to look at charts, but for me personally, this is my favorite, and that's what you're looking at right now. You're looking at TradingView, right? So, let's see. And this is a stock chart. So first, I want y'all to look at the bottom, right? I want you to look at the bottom down here. And what you see is time, right? Yeah, February, March, April, May, June. Um, if you go to a shorter time frame, these are your time frames up top. So this is a 5-minute chart that I just clicked on, and you see that it's showing you the time at the bottom. Um, and depending on what time frame you actually choose, right? Each candlestick represents that time frame. So like if we're on a 5-minute chart right here, right? Then each of these candlesticks represent 5 minutes. It took 5 minutes for that one to form, 5 minutes for that one to form, 5 minutes for that one to form, so forth and so on, right? Um, but when, like I said, once you figure out what type of trader or investor you want to be and what your goal is, man, you'll get more familiar with the time frames based on your strategy. So if we're looking at um this and we're looking at it from a point of, hey, this might be something that I want to invest in long term, then the further you zoom out, right, the bigger the actual story of that stock becomes. So if we were looking at the 3-month chart, right, this shows us this is from 3 months. So this chart goes all the way back to 2012, right? So that's what I mean by you looking at the bigger picture. This is the whole history of this stock since it hit the market, right? And for the most part, you can see that it has gone up since it's been on the market, right? But if I'm looking for a long term, this is the type of stuff I would look for. Like, how has it performed over a longer period of time versus looking at a day chart and versus looking at the day chart and it only going back to 2018, right? So now I want y'all to look at this right side. So of course, that is the price, right? So they're just telling you the price of the stock. And as the price moves higher on the chart, that just means that the stock value is increasing. And of course, if it go lower, then it's decreasing in value, right? So these little things that you see here, of course, these are our candlesticks. Some like you can like you can set your chart up. Like some people might have lines, like a line graph, but for me, I like the candlesticks, right? And basically each one of these candlesticks, just represents what happened during a specific period of time. So think of the candlesticks like a chapter in a book, right? One candlestick just tells a small part of the story, and when you put thousands of candlesticks or hundreds of candlesticks together, then they tell you the complete story, of what the buyers and the sellers have been doing, in that with that stock over a period of time. So we're gonna spend a lot of more time like talking about the candlesticks and because for honestly, that's like one of the most important things that you can learn as a trader is how to read candlesticks, right? Um, Now I'm going to show y'all. This is one indicator. I'm gonna put the volume on, right? And this is volume, right? And basically, um, what volume, and this is volume in relation to time, right? And what it's basically telling you is how many shares were traded during that period of time. So if it doesn't tell you like if you think about it, right? Like I'll tell you what, think about volume like this, right? If let's put it in like if it was a football game, right? If the stadium is packed out, then that's probably a rivalry game. That means something important going on in there. You know what I'm saying? Like if it's more people than is normally there, then that's a special game. You know what I'm saying? So the same idea kind of applies to the stock market, where if volume increases, it basically tells you that more people are participating, right, in that stock. And when volume is low, that's showing you that there's not that much interest in it, right? There's not that much interest in that stock. And we like interest. Volume drives price, right? Like if volume tells you sellers and buyer interest. So especially if you see it, the volume is above its average. So a stock could be averaging, um, let's say, um, 20 million shares per day, right? On average, right? Volume. That's how many times that stock shares are bought and sold with that stock on an average day. But for some reason today it's trading at 52 million. That is double, almost triple the average volume that stock usually trades. That means you should go take a look to see what's going on, right? Like, why is everyone paying attention to that stock? Like, what you know what I mean? Like, what's going on? Because volume helps push price as well. Like, that's a part of the momentum. You know what I'm saying? So, um, you know, that's something I want, everybody, to remember, right? That the stock chart itself is it's more than just a picture of just price, right? It shows you what humans are actually doing. Like that's almost that could be three times the average, right? And just to go back to the emotional side, man, it's people buying it because they're excited. Some people might be selling it because they're afraid. Some people are taking profits. And some people cutting their losses because they bought it high. They don't think it's gonna go back up there. They don't want to risk no more than they already put in it. So they might be jumping out of it. But every one of those decisions, right, gets recorded in the actual chart, right? And that's why I always say, price tells a story, and don't think about this like it's your job to predict the future, or it's your job to actually learn how to read the story that the market is telling you. Read the story and then you take advantage of that. And the better you become at reading that story, the more confident you become when actually looking at the charts. And that's what we're working on. Like that's what we doing right now. We're just trying to figure out what would make this chart seem less intimidating, right? So just to go over it again, right? You have your time frames up here, right? That's 5 minute, 15 minute, 30 minute, 1 hour, 2 hour, 4 hour daily, so forth and so on. On this side, you have your price, right? I have a volume indicator on, right? I have a volume indicator on, and this is the indicator button here. So I basically went in here and you could type in volume and I pick one, right? And that's what you see here at the bottom. It shows you volume. And at the bottom here is the time, right? So you're going to see this on every chart. You may or may not see the volume at the bottom. That might be something that you have to add yourself if you want to, right? It's not a requirement, but but volume is important, and sometimes when you're looking, it can help you too, man. It could tell you when something is kind of like gaining momentum, right? So volume is good. So basically those are the basics. And I hope if anybody um needs uh time to screenshot that slide again, just let me know and I'll go back to it.
So we got a question in the chat. Say,
Okay.
does volume tell us how many shares have been traded over a specific time period? What exactly is volume showing you?
Yeah, so yeah, volume is just showing you how many times that stock was bought and sold over that period of time. Yeah. Yeah. So this is the daily chart. So this volume represents that particular day and so forth and so on, right? Um so just like if you go to a different time frame, like we're on a 5 minute time frame now. Um, the this is how much it traded in that 5 minute time frame right there. And just if you can't, Alex, just keep up with those questions. I'm gonna go over them at the I'll go over them at the end. Okay, so I'm gonna go to the next one. Get into these candlesticks, man. So, all right, now we're gonna get into what I consider to be the actual foundation of what of technical analysis, and that's the actual candlesticks themselves. All right, and you could take a screenshot of that as well, right? And I want to say that if you could learn to understand candlesticks, man, you already ahead of the game, because candlesticks themselves are telling you their own story, right? And just like volume, like I just said with volume, it's telling you what happened during a specific period of time, right? And it doesn't matter what period of time that is, right? It's gonna be based on what you choose, right? But it records the battle between the buyers and the sellers. So let's break it down. That works, right? So let's talk about uh the open price, right? And the open is exactly what it sounds like, right? It's the price where that candle began. That's where it started at. Okay. So if we're looking at a daily chart, it's the price where the stock opened that morning. So where if when the market opened and Apple, the first price it opened up at was $100, boom, that's your open. You know what I'm saying? And if we're looking at, let's say, a 1 minute chart, right? It would be the price where that 1 minute period started at, right? And every candlestick has a starting point. That's the open, right? So let's go to the close. Okay. Um, the close is where the candlestick finished at the end of that time period. And that is one of the most important prices that you would see on a chart, because the relationship between the open and the close, it tells you who won the battle. It's a battle between buyers and sellers. So that tells you who won, right? So if a stock closes higher than where it opened, the buyers won. And that's what we would call a bullish candlestick. Okay. And they're usually green. Like I'm using like all of this stuff on your chart, you can make your candlesticks whatever color you want. I use green and red, right? And so by default, in most cases, your bullish candlesticks are gonna be green, right? Um, so when you see a green candlestick, just think of it as buyers saying, "Hey, we pushed the price higher before time ran out." So if the stock closes lower than where it opened, right? Then now we're looking at a bearish candlestick, and it usually shows in red. That's telling you that the sellers won that particular time period, right? And that's basically, them saying, "Hey, man, we pushed the price lower before the time ran out on the clock." So it's here's something that I want y'all to notice, right? Like the color of the candlestick doesn't mean that the stock is good or bad. It's just telling you who had the control during that particular time frame. That's it. Like one green candlestick does not automatically mean that the stock is going to keep going up. One red candlestick doesn't mean that it's going to crash. It's just basically this is just information, right? This is information. And um, you can like once you get used to it and you know what you're looking at, man, it's gonna stand out to you so much clearer, right? All right, so we're gonna go to these little lines, right? The low wick and the high wick. So um these are called wicks, and some people call them shadows. I refer to them as wicks, so that's what you would hear me say. The top of the wick, the very top of it is showing you the highest price that stock hit, right? During that time frame. That is the high. And the bottom of the wick, that point at the tip of that is just showing you the lowest point that stock hit during that time frame, right? So though if you're on the daily chart, that means that the high of the day is the top of that wick. The low of the day is the low part of that wick. So um, you know, this is another interesting, part. The wicks, they tell you what happened during the fight, because that's all this is. It's a fight, like buyers and sellers, they're fighting. So let's say that a stock shoots all the way up during the day, right? But before the market closes, the sellers step in and push the price all the way back down. So you'll see that long wick on top, right? That tell us that hey, the buyers tried to push this higher. They tried to push the price of this stock higher, but the sellers fall back and they ended up winning, So, you can imagine the opposite of that, where a stock falls hard like early in the day, and that happens, and then the buyers started to step in and push it back up before that candle closed, depending on the time frame, right? And that tells you that the buyers defended those lower prices. So uh, the body of the candlestick tell us where the battle started and ended, right? So that's your open and close. That's where it started at. That's where it ended at, right? But the wick tells you what happened, like what happened in between that fight, and that's why traders pay so much attention to candlesticks, because you're not just looking at a price. Like you're not just looking at where, one price, man. You're looking at the whole story behind the price, you know? And every candlestick answers a few questions for you. So, and y'all remember this, it's a question of, hey, where did this stock open? Where did this stock close? How high did it go? And how low did it go? And if you can answer those questions, man, you beginning to, read the charts like a trader. There's more to go, but you getting there. And you know that like this might seem like a lot right now, but man, we're just gonna keep building on it. Um, and let's see. Yeah. So by the end of this, though, man, they're not gonna just look like some, green and red rectangles. Let's go to the next slide. I'll give y'all a minute to screenshot that if y'all want. All right, let's move on. This. All right. So um now that y'all we kind of like have an understanding of the parts of a candlestick, right? Um, let's talk about how they like actually work though, right? So every candlestick is of course you know, once again created the same way. But I want to use another example of to put it in perspective. So I want y'all to imagine this, right? So imagine that a stock opens at $100, and throughout the day, buyers continue to buy the shares, and demand increases, and the price begins to climb, and maybe it goes up to 102, 103, and then 104. And it might even hit 105 before the day is over. But once again, if the stock closes above where it opened, you're gonna get you'll get a green candlestick out of that. And that green candlestick just telling you that the buyer, finished the period stronger than the sellers. And that doesn't mean the buyers control every second of the day. Um, prices, may have moved up, pulled back, and moved higher again. And the bell rang. But I would say this, man, and just to throw this in there, right? So um when like I know a lot of people just know about stocks themselves, like buying and selling stocks, but we actually trade options, right? And I'm not going to go too deep into it, but that's another way for you to take advantage of um, price action and price movement in the market. And this terminology, when I say, hey man, price may have moved up, it might have pulled back and then moved higher. We take advantage of that when we're trading options because um you could, options, just to put it simply, that is how you bet on a stock to go up and you bet on a stock to go down, right? So sometimes when we see that a stock is moving up, we might buy a call option on it, right? And we're betting on it to go up. We take advantage of that, get our money out of it, and then we see the pullback coming, right? And we might buy back in on that pullback and go up again, buy another call, take that money, and then we see the sellers start to step in and take control, and we might buy a put. So some days, regardless of whether a stock is going up or down, you can take advantage of it, by way of options because you can actually make money on a stock actually going down, right? But I like that alone is a whole nother video. Like that's a whole nother session to get into option trading. But I just had to mention that because we're talking about how price goes up and down, and that's just another way to take advantage of it. All right. Um, let me see. I'm gonna go back to some real charts. I'm gonna show y'all some real charts, man. We're gonna get away from these slides in a minute, right? So I can show y'all some real stuff. Yeah, Gavin. Hey, those options are crazy, man. Like that is, I'm gonna get into that, right? But I know even before you get to that, man, that's advanced level. You want to know how to read a chart before you mess with options because that's high risk, high reward, and you need to be, you'll blow your account playing with that if you don't have the foundation. So Gavin, I'm not gonna go there, right? But I had to mention it, right? But we could talk about that a little later. All right, so now I wanna, get into some, a few candlesticks that I think that would be good for everybody to start with. And these are three candlesticks that me personally, I look for that, because there are a lot of candlestick patterns, bro. There are probably hundreds of them, but you don't need to learn 100 of them, right? You need to, study just a couple, get familiar with those, and then, move on. I do not, man, I've been doing this a long time. I do not look for shifty candlestick patterns, Um, you know, once again, even candlestick patterns aren't magic, man. And just because you see one of these patterns doesn't mean that the stock is guaranteed to go up. But what a candlestick pattern does is give you clues about what buyers and sellers might be thinking, right? So you know, think of them like body language. You know what I'm saying? If you saw somebody standing in the corner frowned up with their arms folded, then you would assume that they're upset or they cold, right? But either way, their body language gave you that information, but you would still need a little more context to confirm that's what that is. Like, so candlestick patterns actually work the same way. It show you the body language, but you still have to look for other confirmations to confirm that it is what you think it is, if you think that it's about to reverse or go up. So what we're going to look at right now is three of the most common beginner patterns that most beginners look at, and three that I'm not a beginner, but I look at these. They tell me what I need to know. So first up, we had a doji, we had a hammer, and we have what you call an engulfing pattern. So we're going to start with the doji candlestick, right? And it usually forms when the opening price and the closing price are like almost the same. So that means that during that time period, when you see the Doji candlestick, that neither the buyers nor the sellers really took control of that time period. You can think about that like a football game that ended in a tie. That's consolidation. Hey, both teams played hard, but neither one won. And that's what Doji candlestick represents. It tells us that there's like indecision in the market. Buyers pushed, sellers pushed back, and by the time the candle actually closed, neither side had clearly won. So does that mean that the stock is about to actually reverse? No, not necessarily, no. It's just when you see a doji candlestick, that's a sign for you to start paying attention to that stock. So when you see a doji candlestick, think, okay, get ready. Get ready because that candlestick represents no direction, right? You look for direction. We want to know if a stock is going up and if it's going down, right? So you can take advantage of that. If you see a doji candlestick, you know that one of those things are going to occur at some point in time. Either it's going to start going up or it's going to go down because right at that point, it's going sideways. So a doji candlestick is what I would call a signal to get ready. So anytime you see that on a stock chart, get ready, pay attention to it, right? Um, so a lot of times a lot of times a Doji candlestick would appear before a larger move. You know what I'm saying? But either way, you still want to always wait for confirmation before you make any decisions on it. You know what I'm saying? But definitely, hey, Doji, get ready. That's what that means, right? And it looks like that. It might not always, it might not look exactly, it's not gonna be perfect like that all the time. Like that's a perfect T. Like it might not be perfect like that all the time, but you'll know it when you see it. All right. So let's move on to the actual hammer, right? And you know, this was probably the first candlestick that I tried to learn about. And it was one of my favorites because, it tells a more clear story, right? If you notice how the candlestick um, itself has a small body near the top, right? And a long wick. Remember, we just spoke about the wick underneath. Basically, this will happen. So earlier in that time frame, the sellers pushed that stock lower. That's why you have this wick down here. The sellers actually pushed that stock to that point at some point in time. And if you were looking at that stock, you might have thought that the stock was going to keep falling, right? But something changed and buyers stepped in and they were aggressive and they bought enough shares to push that price all the way back up before that candle closed, right? So that long lower wick is basically evidence that buyers defended those lower prices, and that's why hammers often appear near the end of a downtrend, right? And they can signal that buyers are beginning to fight back. So once again, just know that by itself, a hammer by itself isn't enough, right? To just be like, hey, I see a hammer, that means that stock is about to go up. No. Um, it is very important where that hammer actually formed on the actual stock chart, right? And you need to know if it formed near support, um, when it formed, was it strong volume, and did the next candlestick after that hammer candlestick form um, confirm that the buyers had actually taken control or they were taking control. And that's what traders look for, you know? So let's move on to the engulfing, right? So this one is usually easier to recognize because if you look at the candlestick before it, it took out the high and low of the previous candlestick. It engulfed it, right? So the candlestick that's before it could actually fit inside of it, you know? Um, and so it basically an engulfing candlestick forms when it completely covers the previous candlestick, you know. And in this example here, we're looking at a bullish candlestick because as you can see, you see the red one. So that's the previous candlestick, and it took out the high of that previous candlestick, went higher than it, and at some point it actually went lower than it, right? So basically, you have first you have like a smaller red candle, and it might look like the sellers are still in control, but then the very next candlestick opens up and the buyers step in with all of the strength, and it erased the previous day's selling. Like it went here and then it erased it and took the high out. So that large green candlestick, it ends up wrapping around a whole previous red candlestick. And if you're looking at the day chart, and y'all see I always refer to the day chart because that for me when I'm looking at charts, that's where I usually start, man. I look at the day chart. I might look at the smaller time frames for entry and exit, but I usually start my charting with the day chart. So that's why I keep referring to the day chart, the daily chart. But I would say like, the engulfing candlestick basically tells you that the buyers became, all of a sudden became much stronger than the sellers, And sometimes this could signal that momentum is beginning, to shift upwards. But once again, it all depends on where that happens, right? On the chart pattern. So just seeing an engulfing candlestick on a chart does not mean that. You know what I'm saying? It depends on where it is, right? And there's also a such thing as a bearish engulfing pattern as well, which is just basically, the opposite. And a large red candle completely covers the previous green one, and it shows you that sellers have taken, control. So I just, please just remember like this one thing, like no candlestick pattern works 100% of the time, right? I'm a realist, man. If for everyone in here that knows me, know, man, I don't sell no dream with this, man. Like nothing is guaranteed. Nothing. Nobody wins all the time. That does not happen. Like nothing is guaranteed. So even, we're just um looking at things that just give you a higher probability of making the right decision, and that's what it's about. I look for high probability setups, and that's what we're talking about right now. So if somebody tell you, hey, every hammer means buy or every engulfing candle means the stock is going higher, they wrong, man. And seasoned traders don't trade patterns by themselves. You have to combine it with something. So I have to combine that position of that candlestick with support and resistance, trend direction, volume, momentum, and the overall, market, like the overall market sentiment. And that's because context is important. So, the exact same hammer um, can be an excellent signal in one location and completely meaningless somewhere else, right? And that's why we don't memorize patterns. We just try to like what we talking about now, we just trying to drill in the story that the stock, that the candlestick, that the patterns were telling us. Like, um, you know, when you stop asking yourself like, yeah, what pattern is this? And start asking like, what are buyers and sellers trying to tell me? That's when you kind of like start to begin, start to think like a trader, just instead of somebody trying to memorize all of these shapes, you'll drive yourself crazy. There are too many patterns for you to memorize them all. Definitely. So um, don't worry about trying to learn 50 different candlestick patterns. You know what I'm saying? If you can understand these three right here and the story behind them, you'll already have a strong foundation that you can build on more as you continue to learn, right? So start with these three. That's it. Just focus on looking for dojis, hammers, and engulfing candlesticks for now, right? And you can add to them over time. I'm gonna go to, let me see. I'm gonna see if I can find one like on a real chart, so that y'all can actually see it in real time. Matter of fact, I might be able to use this one just so y'all can see what it looks like in action. Hold on one second. Okay, cool. All right. I'm a visual person, man. I like to look at it, right? So, uh, all right. So back to this chart, right? If y'all notice, if you paid attention, right, you see that this isn't a perfect hammer right here, right? It's not perfect. It might be mistaken for a doji candlestick, actually, right here, right? But remember, it could be considered a hammer if the wick is 2 times, right, the size of the body. And this is the body, which it is. So you can consider this a hammer, right? And this is this is a downtrend. And if you refer back to the last slide, it's almost the same pattern, right? And if you look at it, you can see what happened after it broke above that high, right? And I'm just gonna I can't help myself. I gotta tap into this, right? Just to go over like an example of entries and exits real quick, right? Because we're an hour in. I'm going longer than I tried to, but I'm gonna give y'all this, right? So this could be considered a hammer right here, right? So if I see this, if I saw this, right, even before this stock did all of this, right? I'm gonna cut it, go all the way back, take this. All right, cool. All right, so right here, right? I would have saw this forming right here. Um, I would have notated the high of that candlestick, right? At the top of that wick, right? Which was $202.40, right? This is now I'm just going into like, how I would have found an entry for this, right? Real quick. And I'm gonna move on to the next slide, but I know someone asked me about entries and exits. All right. So I would have looked at that, right? Because you always want to look for confirmation, like that it's actually reversing. So one of the confirmations that you would look for is if a stock is actually taking out a previous high, right? So this 202 40 is the high of this day, right? And if I'm waiting for tomorrow, when I get up, I'm gonna set an alert to tell me when or if this stock breaks that high tomorrow, right? And once it does that, then I know, okay, maybe the buyers are starting to take control here, right? So I would have set an alert here, right? To let me know that. And once I saw that and you see it, right? Look at this. So it broke it, right? It went as high as here, right? 205. And then the sellers tried to take control. They pushed it all the way back down to 202.78. But they had the momentum at some point. So if you know about option trading, right? Because that is what I probably would have done with this. I would have looked for an option, right, to take advantage of that price action. Um, that is what a $3 move that day, right? That stock went up at least almost $3 that day. In the options world, depending on your contract and some other variables, that could have turned you 140% that day, right? A $3 move in the option world is crazy. But if you just own shares of that stock, right, and it costs $200 per share, that three $3 move, man, that was just a teardrop in the bucket, right? But in the options world, that $3 move could have taken us to 150%, return, right? So if I'm just, being risky, right? And I'm okay with the risk, I probably would have entered this trade or bought a call option because I'm betting on it to go up once it crossed that 202.40, right? But I'm gonna be honest, I would have looked at more than just that price. Like just it breaking doesn't mean anything, right? Because if it had broke and I would have bought up here, somewhere after it broke, it came all the way back down to 202.78. So a winning trade could have easily turned to a losing trade. So like I said, don't look at it like this is just enough, but I don't want to take all day going into all of the other indicators that I would have put with that right now, but just giving you an idea of when price actually breaks out of a range and when trying to show you how when buyers take control, right? So, okay, you could buy an option contract that expires a month from now. You know what I'm saying? And give yourself some time because this is a day chart. So regardless of what pattern where I think this chart is actually going to, this stock is actually going to go, because I'm looking at a day chart and it take one day for me to get a candlestick, I have to assume that it's going to take a while for it to happen. Whatever I think is going to happen is going to take a while because it takes one day to form one candlestick, right? So, okay, you get in there, and then that was the real move. So let's say that, okay, I want to weigh on the side of caution, right? This was the real confirmation that the buyers had taken control. It wasn't this one because this could have faked you out right here. You know what I mean? You would have got in there and went up and got pushed down. You thinking, that's the fake out. And that's how a lot of people get the rug pulled from under them. If on a conservative level, right? If you really want to manage your risk, then this was your real move. That candlestick right there was the one to confirm that, hey, it is going up, right? And you could have got in there. Getting in here just would have been you saying, hey, I accept the risk. You know what I'm saying? So as you can see from that point, it it went up, 215. You know what I'm saying? From the 202. So that's a $13 move. In the option world, yo, we eating off of that, right? But this was a reversal, it was in a downtrend. This candlestick here was like an anchor and it bottomed out right there and it started going in the uptrend, for the most part. Trade sideways a little, no. Up. And it'll shake you out, but for the most part, it's steady going up. But I just, I'm gonna get away from that, but I just wanted to show y'all like what it could look like in real time. And as you can see, that candlestick is not as pretty as the one that I have on that slide. They're not going to they're not gonna look like that. And while we talking about the hammer and the doji candlestick, I'm gonna show y'all one that I see forming on something today, right? As that we could possibly or you can possibly keep an eye on. And that is this one. Okay. Now, don't that look almost the same as the one that we just looked at? Right? And this is Microsoft. This is Microsoft. So, Microsoft had a good run up. Now it started going down in like a downtrend. So I would keep an eye on that one as well. Um, and this is the weekly time frame, but potentially that's for it's this same thing is happening here, right? But once again, you wait for confirmation, to confirm that it's reversing. But this is Microsoft right now today, right? So you could start, what I'm saying, watching that one tomorrow if you want to, right? Um, you know, uh, Actually, I believe, and it's just I'm just gonna throw this out here real quick since we're talking about it, that Microsoft is eventually gonna touch 400 again. Um, but yeah, so same pattern almost forming. This is a weekly time frame. So of course it takes one full week for these candlesticks to form. So this is not something that I think will happen next week, right? If it happened next week, great. But I don't think, I'm looking at a weekly time frame here, right? So even for this stock to even reach this level again, it would take 2 weeks for it to even get to 420 or another week or two before it get there. And that's if the buyers actually take over, which we don't know if that's going to even happen yet, right? But yeah, so that's that on that. Let me see if I can find one that shows the engulfing. Candlestick. I think I saw one here. 1 second. I wish there was a way for me to let y'all look at it and tell me what y'all see. All right, so um, that might be one right here, right? So downtrend, this looks like an engulfing candlestick for the most part, right here. And from that point, you can see that it went up, right? So if let's see. Let's see. Yeah, so that looks like an engulfing candlestick. And then it went up. Don't always work that way. Positioning matters. So it happened in a downtrend. You had the green one, it went up, right? So this stock opened around 245 and got as high as maybe 285, right? So that's like $40 per share, right? Increase from this point up to this point that you would have gotten off of your shares. You know what I'm saying? So that's not bad, at all. All right, so we'll go back to the slide so we can wrap this up. All right, so all right, yeah, if y'all hadn't already, go ahead, take a screenshot of that before I go on to the next one. Okay, so I made mention of support and resistance, but this is actually one of the most important concepts in technical analysis. Okay. So if you don't remember anything else from tonight, I want you to remember that stock has memory, right? And price tends to react at certain levels over and over again, and those areas are what we call support and resistance. So we're gonna start with support. Okay. Um, think about support like the floor in your house, right? If um if you bounce a tennis ball, right, it's gonna fall until it hit the floor and then it's gonna bounce back up, right? Now, can it break through the floor? Mm, Maybe depending on what kind of floor you have. You know what I'm saying? Nah, but it can a tennis ball break through the floor, right? We just use our imaginations, right? Probably if enough force is applied to it. You know what I'm saying? But most times when you throw it, the floor uh, is gonna stop it, right, from breaking through. And support, when you think about support on a stock chart, it works the same way, right? So it's basically um an area where buyers have historically stepped in and said, "Hey, man, this price right here look like it look like a good deal to me." You know what I'm saying? I'm buying, right? And as more buyers enter at that point, the demand increases, and price often begins to move back up from that support level from that point, right? Um, so, I want y'all to notice that I didn't say that support is like one exact price. Like support is usually an area. You know what I'm saying? It usually covers an area. So price might bounce, a few cents above it or even, dip slightly below it, you know what I'm saying, before moving higher. But that's normal, So let's go to resistance, right? And it's the opposite. And since we use the floor, I want you to think of resistance as your ceiling, right? So if that same tennis ball, right? If we threw it at the ceiling, it's going to hit the ceiling and eventually come back down and hit the floor, right? So it's the opposite. Resistance is an area where sellers begin taking control. Okay. So maybe at that point, investors or traders decide to lock in profits, or maybe they believe that the stock has moved high enough. But whatever the reason is, selling pressure begins to increase, you know what I'm saying, at those resistance levels. And price often struggles to continue to move higher, you know what I'm saying? So again, um, resistance isn't always like one perfect line either. It's usually an area where the price has had trouble moving through a lot of times, right? So sometimes, and this is an interesting part, right? Because, and this is important, right? Eventually, right? Eventually, sometimes, buyers become so strong that they overpower the sellers. And instead of that stock, right, hitting the ceiling and coming back down, price could push through it, right? And that's called a breakout, right? So when price breaks through one of those points, it's a breakout, you know? Um, so it's like, let's go back to football, Washington Commander fan. So let's talk Washington Commander football, right? Um, if a football team, you have your running back. They're trying to break through the defensive line and they've run the ball 3 times. Okay. And they keep getting stopped. They're not getting that many yards on it. And then all of a sudden, the running back find a hole, break through, boom, going downfield, and he off to the races, right? That is exactly what a breakout looks like. Like, that means that buyers, if it's a breakout to the upside, that means that buyers finally became strong enough to push price beyond, that resistance level. Now does every breakout continue higher? No, no. There, some breakouts fail and you will get faked out sometimes by them, right? Um, price may move above that resistance level only to fall right back below it, and that's why, you know, like seasoned traders, man, they wait for confirmation, instead of chasing that first move. Because let me tell y'all this, a lot of times that first move isn't the real move. So you might jump in there and it go up and then it come back down to make you sell it and panic. And then it runs through the roof, right? The first move a lot of times isn't the real move. Okay. So that's why you wait for that confirmation. Just like we just looked at that Doji candlestick. The first candlestick blew past it and then it dropped all the way down and scared everybody. It made everybody think that, hey, I just got faked out. And then the candlestick after that just took it to another level, right? Um, so another concept I want y'all to understand is that support or resistance can actually switch roles, and that's called. You'll see it sometimes. They might say a SR flip, and that's a support resistance flip. A level that was once resistance can later become support, and a level that was once support can later become resistance. Why? Because people remember prices, and if a stock finally breaks above a level that it kept rejecting, then many traders begin viewing that same level as a buying opportunity if the price comes back down, right? And that's why you'll often hear traders say that, old resistance became new support. So um I will give y'all this piece of advice that helped me early, what I'm saying, in my trading journey, but don't focus on drawing like perfect lines and stuff like that, man. Just focus on like identifying the areas where price has reacted multiple times. So I just want you to ask yourself, like, when you're looking, like, has price bounced here before? Has price been rejected here before? If the answer is yes, you probably found, a very important level, that you should mark out on your chart. So charts is simply showing us um where buyers and sellers have agreed or disagreed on price in the past. And while history doesn't guarantee the future at all, nothing's guaranteed in trading. It often gives us, valuable clues. You know what I'm saying? And that's why that's what makes support and resistance that much more powerful. Like it's nothing. It's not no magical lines or nothing like that. There are areas where human psychology just tends to repeat itself. Like I said, stock has memory. That might be crazy to hear, but if that stock was once at $10 and it's at $5 now and it's bullish, it's trying to reach that $10 again. Believe me, like it knows it was 10 at one time. So you just have to look for confirmation that it's actually heading in that direction, and get in where you fit in, from that point. But as you continue to study charts, you'll start to notice like those levels everywhere. You'll start seeing like stock just stick in a certain point, and you might not have known why, because these are those invisible lines that you don't see on a chart until you draw them, and then you see them. But once you start recognizing them, and you'll start to understand like why so many traders pay attention to them every day, you know. So I want y'all to remember these three ideas, right? And please screenshot that slide. Support is where buyers often step in. Resistance is where sellers often step in. So that's why you see those rejections at those levels. And a breakout happens when one side finally becomes strong enough to take control, right? And if you can, identify those three things on a chart, man, that's when you have really developed like one of the most valuable skills in technical analysis. So I'm gonna show y'all what that look like on a chart. We're gonna mark off support and resistance. And we'll go to this chart. 1 second. We're almost done, y'all. See here. All right, right. So look at this, right? This clearly, like just based on what I've just said to y'all can see this. Look at this. It's all right here, right? You can see the stock, it's never going to be perfect. Remember that. But look, this stock has hit around the same range this many times, right? It's staying around here. Same for the bottom, right? If you look here, how many times it hit that. So sometimes you like just to draw the range and put a visual on it, right? I'm gonna show you all this. I'm gonna draw a rectangle here just to show you the range of what and let's say we consider this range to be resistance, right? And we're gonna draw this range. Oh yeah, that's too big. Start that one over. That's ugly. All right. So I'm going to take this here, right? And the reason that I drew it like that, because you want to look for levels where the stock like kept hitting the same area, right? And if you look at this, right, I'm not trying to draw it perfectly, right? I can't draw it perfect. It's never going to be perfect, right? But okay, we know that this stock was here, right? It hit the level here and rejected it. It rejected it right here. It hit it right here and rejected it. here's that breakout, right? You might have thought right there, oh, it's on, it's headed to the, it's breaking out. Now we went through the ceiling, we going to the roof. And then it said, nope, fake out, right? And it came back here, and then it hit that level again, went into that range, hit it again, came back down, hit support multiple times, same level, right? Hit it again. Now, let me ask y'all this, right? Just based on what we just talked about, support and resistance, like, where do y'all think it's heading now? Right? Based on its previous behavior, right? Up, down, up, down, up, down, up, down, right? So it would be safe to assume that it's probably going to hit somewhere down here again if it keeps behaving the way that it has been behaving, right? And because it's trading between these 2 points, right? That's right. It's more, you can safely assume that it's gonna head back to the support level. Because look how many times it has done it before, right? And what we call this, right? Because this stock right now doesn't have any direction. I'm on the daily chart, right? But on the daily chart, it doesn't have direction. So we call this consolidation, right? And what consolidation mean? The same thing that when you look at a Doji candlestick, it means to get ready. Because at some point, right? At some point, this stock is going to either break below this level or it's going to break above this level. At some point, it's not going to keep that tennis ball. At some point, it's going to get enough momentum to either break through the ceiling or break through the floor at some point in time, right? When that time comes, we don't know, but you keep an eye on it, right, to watch for it. And this stock at some point, like it's trading where it's trading now at $91, but man, at some point, this stock was a $200 stock. It's at 90. It dropped for whatever reason right here. But at some point, it was a $200 stock. So let's hypothetically say that this stock breaks out of this consolidation, right? And actually breaks to the upside. It might start taking out some of these previous highs right here, right? And if it get here, you can safely assume that it might get there. And it might be on its way back to 200, right? But that's why when you see stuff like this, like these are those invisible lines that you have to draw yourself. Like there are tools and stuff that you can use that'll probably help you with that. But I believe that it's better for you to learn how to do it manually first, right? Before you start getting help to do it. You know what I'm saying? Because you never know. Like I trade from my phone sometimes, and I don't have all of that stuff. I have to eyeball it, sometimes. And the more you start looking at charts, you probably won't even have to draw the line. You'll just see it. You know what I'm saying? So yeah, but this is consolidation. This is the ceiling, that's the floor. So think of it, in those terms. Okay. 1 second. Let's see. I should have found another setup for y'all, man, but I didn't. I took longer than I thought I would tonight. But yeah, I don't. But yeah, so just remember those things, man. I'm not gonna go too deep into the too far into technical. I don't want to overwhelm y'all. Right. So, all right, let's go back to this. Give me 1 second. All right. All right. Let's wrap this up. Okay. So I want y'all, man, to start like trying to read charts today, right? Not tomorrow. Don't wait until you feel like you know everything. Like not when you have the perfect strategy. Like start today because chart reading is actually a skill. And just like any other skill that you have, it only gets better with practice, right? So nobody opens a chart for the first time and understands everything immediately. I didn't. and most traders don't, right? At first it looks confusing, but the more you look at them, the more you study candlesticks, the more you pay attention to support and resistance, the more you watch how price reacts, the clearer everything becomes. So like tonight, we talked about price action. We talked about how charts like track movement. Why we talked about candlesticks and how they show, the battle between the buyers and the sellers. We talked about the common patterns, right? That most beginners use, and three of my favorite patterns, which are the dojis, hammers, and engulfing candlesticks. We talked about support, resistance, and breakouts, right? So the goal is not for you to like leave this thinking that you know everything or nothing like that. It's just I just wanted, I want y'all to leave here with a foundation, right? Like a starting point, something you can build on. So right now, right, if you can, right, I want you to like, open up TradingView, right? I use TradingView. There are some others, but I use TradingView. Like open it up, right? And pull up a stock you recognize, man. It could be Apple, Tesla, SPY, QQQ, Dell, whatever, whatever you comfortable with. It don't matter. And don't worry about buying or selling nothing. Just look at the chart, man. Just look at the chart, and ask yourself, um, I want you to ask yourself like a few simple questions, man. Like, start with, is price moving up, down, or sideways, right? Identify those things. Okay. Um, Ask yourself, where does price keep bouncing? Like, what are those levels where it keep bouncing from? Um, or the candlesticks that I'm seeing on the chart, are they mostly red? Are they mostly green? Are the buyers or the sellers showing more strength? Like who's winning? And just asking yourself questions like that is how you kind of start to develop an eye for what you're seeing. And it actually helps you to begin to learn the language of the actual market. So over time, those small moments of studying begin to add up, man. And that's how I did it. You just piece it together. You don't try to learn everything at one time. Like it doesn't require you. Like I know people that just, I mean, their charts are beautiful. They're just lines and colors and stuff flying everywhere. You know, I'm not one of those people, right? I like to keep it simple, but that's me, right? Some people, like there are so many ways to do this that uh, I don't approach it from a point of, hey, you need to do what I do, right? No, I give my people the foundation. I show them and what I identify with, what helps me. And I also tell them what other options are out there because you build your own strategy. Like, this way might speak to me, another way might speak to you, but our goal is the same, and our goals are the same, and we end up at the same place. We try to end up at the same place because regardless of the indicator that you're using, most of them are using the same information to help you. Is volume, it's momentum, it's volatility, it's historical data. It's being shown to you on a chart a different way. So that's the way I talk to my people. I'm not trying to corner anybody or because you know, if it's 20 of us doing it, we all may use a different way to do it, right? And all of our ways might be right, because you know what the right way is? The right way is the way that help you make money. You know what I'm saying? So even if your way is different than my way, if it help you make money, then it's the right way for you. So that's why, I don't go from it just a standpoint of, hey, okay, my strategy is the only one that worked. But I have studied this stuff so much that I have studied a lot of people, a lot of different strategies. And I just try to share all of them with people and let them choose what speaks to them. You know what I'm saying? So, 10 minutes a day may not sound like much, but if you look at a chart, consistently, man, you'll be way ahead of a person who only shows up, man, when they hear about a hot stock on social media, because consistency beats hype every day, right? And patience beats guessing, and understanding beats chasing. So just look at it like, your journey starts tonight, and just learn it step by step, man. Practice what you learn, grow at your own pace, and don't be afraid of charts, man. Charts are not here to intimidate you. They're here to inform you, and the better you learn to read them, the more confident you'll actually become, right? Think of it that way. They were scary at first. Okay. And so we're gonna close out. And I just want to say thank y'all, man, for spending the evening with me and listening to me rant and rave about these stock charts. Because I actually enjoy it. So, and I want to thank y'all for just being willing to learn, man. Like, that's major. A lot of people talk about it, and this stuff here is the part that either it run people off. This the part of stock that most people want to skip, right? They just want to get to whatever they want to get to. But man, following somebody blindly is not the way, bro. Like, um, I want you to understand why I'm buying what I'm buying, or why I'm telling you that it's a good buy, so that you can make a decision for yourself based on your money, your risk tolerance, your financial goals, and determine if what I'm saying is a good one is an actual good one for you. So, I appreciate y'all, man, for trusting me, to break it down. And I hope that this helps the stock charts feel a little less intimidating. Because man, we just covered the foundation. I promise you, the stuff we cover right now, once you get that down pat, then everything else you add to that is only going to help you in regards to technical analysis. I don't care what patterns or what indicators you use later on. Everything that we went over tonight is the foundation for it. It for everything. I don't care what it is, for everything. Okay? Just remember that. But I included, a few ways for y'all to stay connected if you want to continue learning. You'll see on this screen, you got the website for global stock alerts, the QR code for the books and so forth and so on, and access to our Discord where we really get it in. That's where we really get technical. That's where the magic really happens, right? And I go a little deeper in there with my people there while we learn together, because that's how I see it. We're a community. Man, you never stop learning. You never stop. You will never know all of this stuff, man. Everything. So I learn from my people. We learn together. Um, so I have quite a few videos on YouTube. Check those out. If you can, that do go into more detail about technical stuff. Some of them a little long, what I'm saying, but it's worth the watch. I promise you. I promise you, it's worth the watch. So again, thank y'all for spending the evening with me, man. Appreciate the time, man, and I just hope I gave y'all a little more confidence, man, to start looking at those charts a little differently. So keep learning, stay patient, and remember, the goal isn't to predict the market, but just to understand what the market telling you, man. And grow from there. So man, I hope to see y'all again. I hope that we can go a little deeper. But yeah, man, check out the Discord and all that, man. Like we really get it in there, man. I know y'all see the screenshots. We working, man, for real, for real. Nobody really teaches us how money actually works growing up. So we learn through mistakes, trial and error, just trying to figure it out. So I decided to create something different from the other stock books, something I felt was simple and real.
This breaks down the stock market in ways that beginners can actually understand it. If you're ready to move smarter with your money, this book is for you. The link's in the bio.